Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak, your podcast available every morning on Apple, Spotify or wherever you listen. It's Thursday, the 6th of February in London. I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today, the Trump administration is poised to unveil its plan to end Russia's war in Ukraine.
The Bank of England is expected to reduce interest rates and its GDP forecast in what could be a bad day for Rachel Reeves and her growth agenda.
Plus, big business does a big walk back. Google joins other US firms in ending policies to improve diversity.
Let's start with a roundup of our top stories.
US allies expect President Trump's administration to present a long-awaited plan to end Russia's war in Ukraine next week. Bloomberg understands the proposals include freezing the conflict and leaving territory occupied by Russian forces in limbo, providing Ukraine with security guarantees and holding elections in the country after a ceasefire. The plan comes as Ukraine's President Zelensky has re-emphasised his belief that American troops need to be involved in any peacekeeping force in his country.
Is Europe enough? No, because this isn't just a matter of numbers. It's about sharing responsibility and ensuring security guarantees. This cannot be pursued without the involvement of the United States.
Volodymyr Zelensky speaking there through a translator to Sky News. The blueprint is expected to be presented at the Munich Security Conference in Germany next week by Trump's special representative for Ukraine and Russia, the retired General Keith Kellogg.
President Trump's aides have sought to tone down his controversial proposal to, quote, own Gaza. Trump suggested that the US could rebuild the war-ravaged territory, displacing more than 2 million Gazans, even raising the possibility of deploying US troops. The proposal was widely condemned in the Middle East and among Washington's European allies and welcomed in Israel as a way to end the war with Hamas. But the message from White House Press Secretary Caroline Leavitt is that President Trump was thinking creatively.
The president has not committed to putting boots on the ground in Gaza. He has also said that the United States is not going to pay for the rebuilding of Gaza. His administration is going to work with our partners in the region to reconstruct this region.
The White House press secretary speaking there. A ceasefire between Israel and Hamas began last month. Talks about a second phase got underway this week.
Google has told its employees the company will no longer seek to improve the diversity of its workforce. An internal memo seen by Bloomberg said the Alphabet company would scrap aspirational goals tied to representation. The change marks the latest step in Silicon Valley's retreat from DEI initiatives, which have been rejected by President Trump's administration. It follows similar steps from tech rivals like Amazon, Meta and Walmart amid pressure and legal challenges.
The US Treasury Secretary says that Trump's administration will focus on bringing down 10-year Treasury yields and not on the Federal Reserve's benchmark interest rate. Scott Bessent told Fox Business that he believes expanding the energy supply will help lower inflation and that reducing the budget deficit will reduce 10-year yields.
So the purpose of lowering interest rates is to lower interest rates. The Federal Reserve, and I will only talk about what they've done, not what I think they should do from now on. They did a jumbo rate cut and the 10-year rate went up. Now I've seen this year, despite the growth estimates going up, 10 years coming down because I believe the bond market is recognizing energy prices will be lower.
Treasury Secretary Scott Bessent speaking there to Fox News. The administration's goal is to achieve non-inflationary growth, with Bessent supporting making the 2017 Tax Cuts and Jobs Act permanent to continue US economic growth.
The Bank of England is expected to cut its base rate to 4.5% later today. While the move lower will be welcomed by many, the outlook that will accompany it will not, as the central bank is expected to downgrade its UK growth forecasts and warn of higher inflation for the year ahead. As Ewan Potts now reports, the bank's latest projections may make for uncomfortable reading for the Chancellor Rachel Reeves.
There's likely to be good news and bad for the Chancellor today. Economists and traders are all but certain the Bank of England will cut UK interest rates by a quarter point at the MPC meeting today. But much of the focus will be on the bank's growth forecasts. And this is where things could get ugly, with downgrades expected to the estimates for this year, next year and for 2027. Economists surveyed by Bloomberg also expect the inflation forecast to move in the wrong direction, with food and energy prices proving sticky. Little to no growth and inflation above target means the UK economy is sailing dangerously close to stagflation territory, and that's definitely not the growth narrative the government is so keen to promote. Ewan Potts, Bloomberg Radio.
We'll have live coverage of the Bank of England decision at midday London time on Bloomberg Radio, including the press conference by Governor Andrew Bailey.
Now to the latest earnings. Societe Generale has announced a €1.7 billion investor payout for last year as fourth quarter profits beat expectations. The French bank said that net income more than doubled from a year earlier to €1.04 billion, and it set a target for revenue growth for this year of 3%. The lender also says that it is beginning to see the benefit of the earlier period of rate hikes in the French retail business.
France's Prime Minister François Bayrou has survived 2 no-confidence motions in Parliament, assuring the passage of his 2025 budget following months of political turmoil. The new budget includes concessions to the Socialist Party, with €52 billion worth of savings to reach a deficit of 5.4% of GDP next year. Our Paris Bureau Chief Alan Katz says voters have grown tired of delays.
The French public was not in the mood for months more of this political and financial turmoil. It really had slowed down investment and any sort of decision-making with businesses. And so these political groups that pushed out the former prime minister really sort of, I think, felt under the gun not to prolong any sort of additional uncertainty or, turmoil in France.
Bloomberg's Alan Katz speaking there. French bonds rallied this week, although Bayrou has described the budget bill as imperfect. The country is on its third government since President Emmanuel Macron called snap elections last summer, in which no party secured a majority in the National Assembly.
Those are our top stories for you this morning. Let's have a look at the markets. Asian equities are advancing. You've got the MSCI Asia Pacific Index up by 0.2%, and quite a significant surge for the CSI 300 in China, up 1.1%. European stock futures also looking positive this morning. US Stocks 50 futures are up by 0.5%. This is the yen outperforms. Policymaker Tamura flagging the need for 2 or more Japanese rate hikes early next year. The Bloomberg Dollar Spot Index up 0.2%. Oil prices fairly calm. WTI crude futures up 0.4, $71.34, and 10-year US yields moving a basis higher at 4.43. Those are the markets.
In a moment, we'll bring you more on the US plan to end the war in Ukraine, plus Google ending its workforce diversity programs. But another story that caught my eye this morning. Now, Caroline, I know that you are not a coffee drinker, and I wonder thus how baffling you find people's very complicated coffee orders. I do drink coffee, and I still can't believe how long it can take some people to order a coffee.
I can never remember what coffee you drink, but I do get you one in the morning sometimes. This is all about Starbucks, and apparently you can order all your drinks on the app and have them there ready. Although I noticed that Starbucks actually knows how long it takes you to pick up your coffee from the end of the counter.
This is the data powers everything, as we know.
They have a metric for that. But yes, they want to make it easier for the baristas. They are cutting the number of drinks you can order online, and they want you to make them more straightforward.
And there will be fewer options for people to take as well. They're going to try and simplify the whole process. This is all part of the CEO's efforts as part of the turnaround that he's driving at the company as well, to cut waiting times. His whole broader goal is to make ordering and working at Starbucks less chaotic. 4 minutes is what he says people should have to wait in person for drinks when they walk in as well. There are still plenty of options available. People will still be listing off 6 ingredients to you, Caroline, if they're giving you their coffee order, but there will be fewer options than they had before, which is all part of this effort.
Yeah, well, I wonder how much the writer on this story has drunk in terms of coffee. Daniela Sittori, it's her story today on the Bloomberg Terminal.
Let's bring you back to our top story now, and President Trump's blueprint to end the war in Ukraine may be delivered at the Munich Security Conference next week. Our EMEA News Director Rosalind Matheson is with us for more. Ros, good morning. What are the outlines of this plan for Ukraine after 3 years since Russia's full-scale invasion?
Well, a lot of it is still actually not that clear, but what seems to be within the parameters of it, and it might come from Keith Kellogg, who's the key aide for Trump on Ukraine, is a plan to essentially freeze the conflict. And that means that the land that Russia is occupying doesn't really revert to Ukraine. It just gets frozen, and Russian troops may end up staying there and occupying. And obviously, the longer you just occupy land, the harder it is to evict you in general. So that may not be a bad result for Russia to be able to freeze the conflict in place. But what you're doing is trying to prevent them going any further. And so you offer Ukraine some sort of security guarantees. We don't know, again, what those would look like. We know there's been a concern from some quarters about any kind of move to bring Ukraine into NATO, and that doesn't seem to be on the table in the short term. But what kind of security guarantees does that include? So you've got those two parameters, which essentially stops the fighting or slows it down. You can't imagine it would stop entirely. And that may pave the way then, for example, for elections to happen in Ukraine and for martial law to be lifted.
Although Ukraine does have troops on Russian territory and has done for 6 months, so that's also an interesting angle. What do you think? Would there be talks between Putin and Zelensky? Might we see that?
Well, to your point, absolutely. Ukraine is occupying. It's a very, very small part of Russian territory in Kursk, but they've got it, and they've stayed there for months, and that's possibly quite a good bargaining chip for Ukraine, because it's just constantly frustrating and embarrassing, no doubt, for Vladimir Putin to have them there. So they've obviously decided to hold on to that land no matter what, to use it in any negotiation. I mean, we are seeing signs that Vladimir Zelensky would be willing to sit down with Vladimir Putin and try and talk through some sort of solution to this. The question is, in what order would any of those conversations happen? And would Vladimir Putin, no doubt, prefer to talk first with Donald Trump and try and channel a negotiation in a way directly through the US? And that's Ukraine's concern, is that things kind of get agreed between Russia and the US and perhaps others before there's actually a conversation directly between Ukraine and Russia.
What about China's role in all of this as well? Do we know how Beijing are likely to approach this?
Well, we know that Beijing has been generally favouring some kind of solution to this, and something that just freezes the conflict and allows people to say that the war has come to a halt, at least for now, might be something that China would support. There's been a lot of talk about China's view on this, whether they are overtly or tacitly supporting Russia by continuing to deal with them economically, by giving them cover diplomatically and so on, providing them the essential tools for technology that find their way into weapons. And that's all probably true, but China equally does seem to want this war at least to come to some kind of resolution. So you can imagine they'd be encouraging of that process.
Well, thank you so much for being with us this morning on that, our top story around this blueprint to end the war in Ukraine. Bloomberg's EMEA News Director, Roslyn Matheson.
Now, Google is ending its diversity, equity and inclusion goals for its workforce, dropping the commitment to improve diversity after similar decisions from Amazon, Meta and Walmart. Bloomberg's Tiwa Adebayo is here with more on this story. Tiwa, what were Google's aims and what have they changed?
Well, the real crux of this story is that Google is no longer formally seeking to improve diversity in its workforce. So the company put out an internal memo to employees, and it said that it's dropping what it's referring to as aspirational goals tied to representation. And that also comes as this week Alphabet, the parent company of Google, filed an annual filing with the SEC, which omitted a line saying that it was committed to making diversity, equity and inclusion part of everything we do and to growing a representative workforce. That statement, or words to that effect, had appeared in its annual reports from 2021 to 2023. So a significant omission there. But what does this look like in practice? Well, previously the company had ambitions to hire more employees from historically underrepresented groups, and that's what they're scrapping. So just to give you an example, in the memo that was sent to the employees, their head of HR said that they set in 2020 aspirational hiring goals focused on growing their offices outside of California and New York, for example, to improve representation. And they say in the future, we will no longer have aspirational goals like that. So it's important to remember that these changes won't just affect underrepresented ethnic groups. For example, it covers the full spectrum of representation, including other metrics like geographic location communication. But it's worth also mentioning Google's explanation about all of this. The company has said in a statement after that news broke that they're committed to creating a workplace where all employees can succeed and have equal opportunities. And they've added that they're just reviewing the programs that they have that are designed to help them reach that target.
How much pressure is there from the Trump administration to reverse DEI?
Well, we've heard from Google itself, actually, that some of these changes are being driven, at least in part, by directives from the Trump administration. So the company says that it's evaluating changes required following recent court decisions and executive orders from the president on DEI, and that's because it has status as a federal contractor. And actually, Alphabet is already facing legal challenges to do with DEI. There's an anti-DEI shareholder proposal from the state of Oklahoma, which is trying to use its influence as an investor to end DEI in corporate America. So they're already having some issues there. And actually, zooming out for a minute to the wider Silicon Valley landscape, Google isn't alone in this shift. We've seen similar from peers, including Amazon and Meta. They've also retreated from DEI policies in recent months following the pressure. It's interesting to note that the CEOs of both Meta and Amazon, Mark Zuckerberg and Jeff Bezos, both attended Donald Trump's inauguration last month. So it's definitely a sort of change in climate for the sector. Previously, Silicon Valley companies had been viewed as this sort of bastion of liberal ideals, but they're having to adjust now to a new reality and a new president.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.